Hi guys, it's Any, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. And today is Thursday, the 16th of May 2019. I'm going to go through some UK and US stocks and do some technical analysis breakdown of some of these stocks on my watch list. Let's get straight into the video. Now you know what I'm going to ask you to do next. Hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, there's a link to my mailing list. Now if you join my mailing list, you get priority access to my free training course that I'm creating for beginner traders. And you also get weekly emails of my latest videos. You also get access to a spreadsheet that I have that has all my entries, exits, stop losses, and the reason behind all my trades. So you get a breakdown of all my watch list and all the trades that I've made. Last but not least, if you comment in the comment section below on stocks that you want me to do a technical analysis breakdown, I'll do it in the next video. Now let's get straight into the analysis. Okay, I'm going to start with the two UK stocks. The two UK stocks I'm checking out today is one is IAG. Now IAG's actually finally made the decision after flirting for some time. As you can see here, I was making a coil on the 30-minute chart, and I just plotted that line because it hadn't really decided what it was going to do. Still, it's going downwards now, but it could break out at any point. So you just have to be wary of that. On the daily chart, though, it looks like it's selling off some more. So and this is what I said I thought would happen. Once again, I said the 180-day simple moving average is pointing downwards. So that told me that IAG was still going to sell off beyond the support line. And I've been saying this for some time, but I kind of lost confidence when it started climbing up. I thought maybe it was staying true to the support line and it was going to climb up. But it looks like it, on the daily chart, the 15-day exponential moving average is still acting as a resistance for price action, and it's not breaking out of this. And that's what you need for it to break out to really know that it's a bullish run. So right now it still looks like it's going to sell off some more on the daily chart, and the MACD and RSI both kind of say the same thing. On the 4-hour chart, it also looks like it's selling off, but it could be just retracing before climbing again. So this isn't really, I'm not really sure yet on the 4-hour chart. I need to see it to kind of sell off some more before I'm kind of confident that it's in another bearish move. So I just have to wait a little bit longer. I keep saying wait, but it's better to just be sure of something before entering the trade. And yeah, once again, if you go into 30-minute chart, it's sold off, but this could be a false breakout and it could go back up again. So once again, I'm waiting and to see if it sells off even more. Gotta be cautious right now because the whole market is starting to recover after the last week or so of trade talks with the US and China breaking down. Market sold off a lot, and now it's starting to kind of regain some of the losses that it made from last week. So a lot of stocks are actually climbing today. So next one is SLA. SLA I stumbled back across on by accident. If you saw my last video yesterday, I was actually just making a comparison between JetBlue and SLA, and I didn't realize that they were exhibiting the exact same pattern. So SLA, if you remember this from last month, this was one of my pick of the months and it made me a decent amount of money. Actually, before I go into SLA, let me show you my stock watch list. I haven't looked at it, showed you in some time. So this is the watch list that you can get access to if you join my mailing list. I break down all of the stocks that I made major swing trades in. Some losses, some gains, but as you can see, the gains are bigger than the losses because I manage my risk. I entered AMD at the end of last month and I lost £37 because it sold off, but now I've re-entered it again because it looks like it's going to go up. But I'm going to break this down a little bit later on. So I've got Cron and JetBlue are the two positions that I'm currently in right now. Yeah, I wasn't talking about AMD, I meant Cron. So yeah, so Cron and JetBlue are the two positions I'm in right now, and these are all the positions that I was in before. As you can see here, it dates back to the beginning of this month, and but yeah, you can go through this if you join my mailing list. I can give you access to this. So yeah, SLA, if you know by now, it's broken out. It triple bottomed at the it was a descending channel pattern, double bottomed, and they started breaking out. Broke out, and I sold my position at the peak pretty much, and they started selling off. Now it's consolidated, well it's not consolidated, well it's consolidated at the 180-day simple moving average point on the daily chart. Now what this is telling me is that this 180-day simple moving average is most likely going to start curving up, which tells me that SLA is going to start a bull run, and it's going to continue its bull run. It sold off a little bit to this line, treat this as support, and it's going to carry on this bull run. So right now this would be a great entry point because you can set your stop loss just below here and just ride it. So I'd say if you wanted to take a position, this would be a great time to, as you can set a tight stop loss. If I go into the 4-hour chart, you can set a pretty tight stop loss. I'd say the stop loss would just be below where this is. So you can set a 10 pip stop loss and you can just ride it for 40, 50, 60 pips. I don't know even know where to ride it to because you don't know how high it's going to go. But yeah, 10 pip stop loss and can ride it high. So this would be a great position to take. Next one is GUSH. Off to the US stocks. Now it's GUSH. GUSH, you know, is all about, if you want to trade this, you want to trade this on a 30-minute time. But let's look at it from a daily first of all. As you can see here, there's a support line here. On the 4-hour chart, it found the support here, and now it's starting to make new highs after flirting with the support line twice, double bottom. On the 1-hour chart, this is a great position to be in right now. So it was just fluctuating up and down from here to here, GUSH, and then it had a little channel support here. It broke out of it, consolidated on it. Now this would be a great place to enter because once again, once you break out the top side, the resistance of channel support, once it consolidates, this is a great place to enter because you can set your stop loss just below the line and then just ride it up. So I expect this to keep climbing up for some time. And the rule of thumb is that whatever the distance is between the base of the support and the resistance of the support, so that's 133 pips, you expect it to go the same distance up. So you'd want to exit around here. And funny enough, this place is kind of like a support line here, so I'll explain to you what I mean. So yeah, the target exit point would be somewhere around here. And you can ride that up. So you're looking at 100 pips and you're risking about 27. So that's about 5-to-1 ratio, which is really good. I've actually I made a video on channel supports. You could probably check that out. It's my chart pattern series of playlist in the chart pattern series playlist in my YouTube channel. So check that out if you want to see how to trade channel supports and other chart patterns. Next one is Diamond Offshore Drilling. Now, Diamond Offshore Drilling on the daily chart looks like it's gonna make its way to the resistance line. As you can see here, it triple bottomed at the support and then started climbing. 180 days simple moving average is curving down, so you have to be wary of that. But I still think it can push up to the resistance line and then maybe sell off before breaking out down past the support line. A little bit similar to Vodafone, but obviously it hasn't been selling off. Yeah, it's been selling off for quite some time, so it reminds me of the Vodafone chart pattern. Remember that it sold off a lot after hitting the support once and then going down. On the 4-hour chart, doing exactly what I wanted it to do. Broke out to the upside, came back down, consolidated above the 15-day exponential moving average, and then now you can see it continue making high highs. So this would be a great long position to take. You could make about 200 pips, and you'd be risking you could risk about 80. So 80 to 200, what's that? That's about 1.7 ratio, something like that. Yeah, that 2-to-1 ratio. I'm talking about it's about 2-to-1 ratio, which is pretty good. It's alright. But yeah, I see this going all the way to this line, and then if I was to predict a little bit further, because the 180 simple moving average is curving down on the daily chart, I can see this climbing to this line, hitting it, come back down, and then breaking out of the support line and then selling off dramatically like Vodafone did. As you can see, once you start seeing enough chart patterns, you start seeing consistent things repeat itself, and you know how to trade a pattern when you've seen it before. Because this happened with Vodafone before, now it's in my memory bank, and I know how to treat this trade the next time I see it. Next one is Cron. Cron was my pick of the month at the beginning of this month, and as I said before, I bought it, but I think I entered too early. The earnings report was on the 9th of May, and whatever happened, it wasn't great, and it sold off. But I exited my position early because I saw that there was no real exaggerated volume when I entered. I entered about $17, which wasn't my greatest point, and then it sold off a little bit. Lost £37, but it's not too bad compared to what I could have lost if I carried on holding it. I would have still been down quite a lot right now. So I sold out my position, but I think now is the time to re-enter, which is why I did re-enter. I re-entered, and now the reason behind that is because it's consolidated above the 180-day simple moving average, treating it as a support, and it looks like it's gonna, once it breaks out of this 15-day exponential moving average, it looks like it's clean and sailing to start making high highs and even break all-time highs if possible. I can see that happening. On the 4-hour chart, it double bottomed here, and then it's starting, and then it broke out of the 15-day exponential moving average. Now all I need it to do is just to make an upward move, but I don't think it will do that today. Maybe tomorrow it will do that. But yeah, I'm already in this position. And JetBlue, I've also taken a long position in JetBlue as well. JetBlue, I keep going on about it, but in Twitter I gave a good fundamental analysis breakdown on my Twitter as to why I think JetBlue is a strong buy. Sound like an analyst, strong buy. But yeah, JetBlue has been just doing well. It's been doing well in comparison to its competitors. It's been doing well overall in the market. It had great earnings, which is why it shot up. But even outside of the earnings, if you look at the technical analysis, it's been great. Check out my pick of the month video for May for the full breakdown of JetBlue's technical and fundamental analysis. I'm not going to go through that now, but it's in my other video. But yeah, broke out of the upside of the descending channel pattern. I didn't enter this position before because I knew that I thought it was going to retrace back, and I could get a better position if it retraced back rather than entering here and then having a little bit of positive position and sitting in a negative position for quite a long time. So when it broke out, I thought, okay, let me just wait for it to retrace back. I thought it would retrace back all the way back to the resistance line, but it's found a support above the 180-day simple moving average. Can you see a consistent theme here? Seems like the 180-day simple moving average acts as a support for a lot of price action in a lot of different stocks. So I entered here, and now I'm just waiting for it to kind of start climbing up again. It may start climbing up next week, but the hardest part of a trade like this is knowing when to exit, because right now it's going to be smooth sailing. Once it breaks out, I think it's just going to keep climbing, and I'll probably just exit when it starts plateauing, kind of like it did here. So it could go here, level off, I'll exit, and maybe catch it when it's at the bottom, and then enter again, so I can maximize my profit, if that makes sense. Now off to the viewers request. One of the viewers requests was PEP. PepsiCo. Okay, PepsiCo. Okay, so on the daily chart, PepsiCo on the daily chart. What can I see here? I actually enjoy breaking these down in front of you guys rather than doing it beforehand, because then you can see my thought process as to what I do when I break down the stock. Yeah, so these lines. Okay, what am I supposed to break down? It's making all-time highs. It's broken out of this pattern. It's making all-time highs. Let me just draw some more lines here. This probably won't be relevant to me, but I'll just draw it anyway. Let me go to the 4-hour chart. On the 4-hour chart, what can I do here? I'll do something like that. Yeah, I don't know what you want me to tell you. It's making all-time highs. Whatever position you could have taken, you kind of missed it. The only thing I'd say is that maybe you could potentially, I don't know. I wouldn't trade this personally because it's already started making all-time highs. So I think whatever move there was to be made, you've kind of missed it. This is a good stock, but you've missed the move, because what I could see it doing it on the 4-hour chart is it can do one or two things. It can retrace back to this line and then carry on making highs, or it can start selling off just because it's once the stock is in all-time highs, you don't really know what it's going to do next, because it's going to have to plateau at some point. Yeah, I'll just probably leave this. I think there's probably better stocks out there, because whatever move there was to be made, if you had shown me this when it was here, I would have told you, okay, yes, it's made a little channel pattern, and you could probably ride it up and then make some money. But because because it's already made this move, I think you've kind of missed whatever opportunities there are. For all I know, it could hit this line and carry on going up, but yeah, I don't know. I just feel there's other better stocks that you can trade in now because it's already at all-time high. You want to catch this before it's got there, not when it's already there, because you feel like you've kind of got to the party late. So that's kind of what I think with regards to PepsiCo. Alright, next one is Yum. Or Yum? Is it Yum or Yum C? Okay, no, Yum China. Okay, no, I'll just do Yum. I'll just do Yum, the US one. Okay, so Yum. Another one that's nearing an all-time high. Let me see what patterns there are here. There's nothing really there. I'm forcing it. All I can see here really is that you guys love your all-time highs, man. Let me see. There's one or two things that can happen here now. It could either come back. I can see it retesting this all-time high. Whether it breaks through is another story. I don't know that, but I think it will retest it because the 180 simple move average is still curving up. Let me check the MACD and RSI. The MACD and RSI looks like it's about to curve back up. I would think that it has a good chance, good likelihood of retesting this all-time high, then probably selling off again or breaking through. Once again, personally, this isn't one I want to trade because these aren't the type of stocks I go for, but I think it's not too bad of a trade because, let me go into a short time frame. See, the place to enter would have been here. It double bottomed and now it's climbing. But the risk to reward right here is you're going to risk 200 pips to make 300 pips. So it's not the greatest risk to reward. You wanted to catch, you probably wouldn't have wanted to catch it when it was here. So then you could have just set the stop loss just below it. But right now, it's nearly 1-to-1, the risk to reward ratio. That's the only reason why I wouldn't enter something like this, because I think it's already climbed up a little bit. But yeah, I do think it's going to climb up and hit this resistance again, and then decide whether it's to break out or sell off. It's a position you can take if you want to, but because the risk to reward is kind of tight, it's not as nearly 1-to-1, I wouldn't take this position based off of my own principles that I use when I'm trading. But that's what I think might happen. Don't quote me on that. I'm not a financial advisor. But yeah, okay, so that was my technical analysis breakdown. Any aka the Noctrader signing out.